Hello everyone, this is Ahura and will be with you to review the US labor market data, the monthly report of non-farm payrolls, NFP numbers, and market review. We had an amazing shock here in the market. With NFP numbers, non-farm payrolls, only with 200, with 22K. I wanted to say even that 200 because the number, the 22K, it's such a low number that it's unbelievable. It's the lowest level since 2021 after condition that the labor market had with the corona crisis. I mean, the health crisis that we had around the world after the coronavirus. Generally, these data, when you're looking at weekly average earnings, weekly initial jobless claims. These numbers in the past weeks, they were not such bad numbers that we say that, okay, following these such a big numbers, such a big miss, such a big mass in the market or missing the expectation. Now that's the weakest labor market that we had since 2021. No, we didn't have such numbers, but still here with only 22K labor, employed, hired or newly created job in official numbers, that's we get surprised. More detail. Government payrolls fell by 16,000 and private payrolls increased by 38,000. 38,000 is less, it's less than half of 75,000 that market expecting. Or the non-farm payroll number, 22K, is more than three times lower than 75,000 market expectations. These data still didn't send or make the unemployment rate to jobs so high. Is surprised here that unemployment rate, as market was expecting, seen at 4.3%. That's also if we are looking after the reason of that and why that happened is because that uh, resigns are so lower, and also leaving the jobs also lower resigns or leaving the jobs at the same time, and the job cuts also is lower if you compare it to the previous months and previous years. Yeah, that's why we can say that the market condition is like more cautious now. And companies and so many employers, they are they're in some uncertain condition that they do not know what's going to happen. That's why they are not hiring at the same time, or they are hiring very low numbers. And at the same time, they're trying to keep the current labors that they have. So that's why in unemployment rate, we do not see such a big mess or such a big missing the expectations and stuff like that. That's why the 4.3% is it's lowest unemployment level in 4 years, but at the same time, it's not such a big deal. I mean, 4.3% unemployment rate, it's not a huge number, and it's not we cannot say that, oh wow, that means that the labor market is dying. Uh, that's on the average earnings on the monthly scale, it's increased by 0.3% and annually by 3.7%, both in line with market expectations. But 3.7% is lower than previous 3.9%. So it means that if you look at the bigger data on the monthly scale, we can say that the labor market's income is slightly not decreasing. The speed of their income, growing income, is slightly less than previous months. But generally, the average incomes, generally the average income on the monthly scale increasing by 0.3%, not so deeper or not so weaker than historical levels. But 22,000 newly created job is really lower than historical levels, because historically we have the one, I mean, the NFP numbers, historically, the average historical is around 150,000. We can say it's better. Yeah, but the innovators say it's better. It's around 150,000 newly hiring or newly creating jobs. Uh, yeah, that's interesting to say that this missing expectations came after weaker labor market data from Europe earlier today. And also at the same time, today we had Canadian labor market data also. We saw that unemployment rate in Canada also increased to 7.1% from previous 6.9%, while market was expecting around 7% unemployment rate. The market reactions. Let's go here. CME Group FedWatch Tools shows now that rate cut expectation at 88% for the September. That's like now we have only 12%. Yeah, do we have the rate numbers? Because it was 98 and now 88. It's just like what happened? Just like an hour ago, just a few minutes ago, it was 98% and 2% and changing so high. Yeah, 88% now we have a chance of rates cut by 25 basis points, while the 12% now we have 12% chance of 50 basis point rates cut, and there is no chance for holding the current rate for now. However, the 50 basis point rates cut is really unreal right now. It's not based on the real market data. So with the current market data, yeah, the maximum 25 basis point rate cut is acceptable, it's economical, it's fine, and we can rely on that. So 25 basis point rate cut going to happen in September 17 and 18. While when we are looking forward for the October, just like before data published, we had almost 6% chance for rate hike in October. Now, not only we don't have that, the after 25 basis point rate cut in September, holding the 4% or 4.25 basis point interest rate is only 20%, and we have more than 70% chance for 25 basis point rate cut, which was less than 50%, and even around 9% chance of 50 basis point rate cut, not 25 basis point rate cut, 50 basis point rate cut. That shows that the market right now is so dovish. Even, yeah, we cannot say that, I personally do not expect any rate cut in October, but the market now, for now, with the current data before next week's inflation numbers, we have at least actually until October we have 2 million data to watch, but still now the market expecting of 70% chance for another rate cut in October, which was less than 50% just before data published. The reaction in the markets, yeah, we can easily expect the US dollar index to be under pressure going forward towards 96 area. Most probably now we are at the 97.50, but this data says that we can go towards 96 area, and the market expecting weaker US dollar. Now we don't with the current data, with the current market condition and overall expectation in a global economy, we don't see too much chance for holding the higher, for holding the 98 area. So we will be traded. We will see US dollar index to be traded under 98, around 96 and 97 for next days. That's weaker US dollar made the gold to increase in the gold against the US dollar, trying to print a newly on higher high. So the gold market is still positive. We still do not have any sign for gold price to slow lower. So the gold is still increasing. On the other hand, weaker labor market putting the pressure on top, the dollar index also increased, slowly eased. Not slowly, even sharply eased. Gold, oil price and energy price also falling as the market is now counting on a weaker demand. On the other hand, the stock markets printing new records. S&P 500 trading above 6,530, trying to print the new records high every day after another, day after each other. And when we are looking at the Nasdaq also at 23,850, almost trying to go towards its highest historical low around 24,000. Dow Jones also trying to do the same, holding the current and historically uptrends, higher levels, and trying to get even higher. These data means that the market can count on more dovish reactions from stock market from Federal Reserve, which means supportive for stock markets. As for the cryptocurrency market, the Bitcoin had a positive reaction with these to these data, same as the stock markets, and now trading again positively. So for now, we don't have. I mean, as long as the Bitcoin trading around above 109,000 is the positive, and we can say that a Bitcoin can go further. And for now, we're expecting higher digits here. So Bitcoin also is the positive, while the stock market is also getting a new, trying to print a new record high. Yeah, that was the data and market reaction. So before ending our live recovery, our live coverage, let's one more time repeat the labor market data. Unemployment rate increased to 4.3% as market expecting. Non-farm payroll only 22K, while the private payrolls increased only 38,000, and the government payrolls fell by 16,000. Average earnings increased by 0.3% monthly and 3.7% annually. These numbers, they were in line with expectations, but generally we can say that the US labor market gives not just a weakening sign, gives the really weakening data. That was the US labor market data and market reactions. Hope it was useful for you, and talk to you soon. Have a good time. Bye-bye.